We're back on A Morning Trade Live. Carnival is trading lower this morning after beating third quarter earnings estimates on the top and bottom lines and noting strong cruise demand for 2026. Adjusted EPS coming in at $1.43 for the quarter, with revenue topping $8 billion. Carnival CEO saying booking trends have continued to strengthen since May, with booking volumes continuing to grow. Let's take a look at some of these cruise line stocks right now. And as I said, Carnival lower off the back of these earnings despite a beat there. We'll unpack that in a little while. Royal Caribbean also lower, as well as Norwegian Cruise Line. Viking is the only outperformer on the day. Let's go inside out now on Carnival and the rest of the cruise lines. Joining us now, very pleased to say, is Pete Najarian, co-owner Market Rebellion. Thank you so much for joining me, Pete. So what were your takeaways from what we got from Carnival today? I mean, it seems like smooth sailing, but not so much for the stock today.
Well, I'll tell you why. I think it's because of the fact that it's performed so well. If you look over the last couple of years, obviously going back to the pandemic itself, but even if you just look at the year to date, it's up 23%. It's up 64% over the last year. So this is a stock that needed to have something big, and they did. They beat on the earnings, they beat on the revenue, they forecast a beat as well. So all of that is sort of packaged together. Now you ask, well, why isn't the stock up a little bit higher? Why isn't it up a couple of percent? It did start up there. It hit 32. It started to pull back a little bit. And I think part of the reason because of that is they're worried about shutdowns. They're worried about tariffs. They're worried about all kinds of things. They're not worried about their own demand, but there is the outside part of this that really could sort of maybe hold back Carnival to some degree. And I think that's what the concern is right now.
Okay, yes, I suppose you're talking about the consumer and whether they sort of pull back on some of the discretionary spending. But for now, right. I mean, things look pretty good. And, you know, when you listen to the cruise lines versus the airlines, I mean, people are booking so far in advance to really secure their holidays, you know, next year, the year after, which no doubt they're benefiting from. Talk to us about the sort of, you know, where it sits in the grand scheme of things. It's underperformed Royal Caribbean, but outperformed Norwegian. What's it doing to find itself sort of smack bang in the middle there?
Well, what I think is a positive for them is just the fact that there is that demand, and they have all these specialty things that they're adding to what people can do in terms of how do they get onto the boat and then get to the next destination. And that's what people are very excited to do, and people are willing to spend that money. I think the spend side of things has been surprising to a lot of us, is just how much people are willing to go out, whether it's out into the future or not. But they want to be able to have that experience, and people are willing to pay for it right now. You know, you do have to wonder. You look at credit card debt, you look at all these other things. Are people just putting more and more on there? Probably yes is the answer, but they're willing to take that risk right now, and I think that's obviously something that's very good for Carnival. It's good for the entire industry. And the one other issue is they've got huge amounts of debt, of course. That is what this whole business has in terms of the build outs, but they're excited about building out even more. And so because of that, I think you've got to be pretty positive on this one. It only trades at a PE of about 13 or 14. So when you're looking for something that makes a lot of money, but at the same time trades at a level where it is right now, I think this is probably a great opportunity.
Okay. Look, you mentioned some of the other sort of news that investors are watching right now, which no doubt feeds into the health of the consumer, which impacts companies like these. I'm just wondering what your overall sort of takeaway is right now with respect to, you know, the jobs picture. Obviously, we're going to be getting a lot of data this week. What the government shutdown is going to mean also for the markets too. And then, you know, this whole sort of wait and see on tariffs and the Fed.
Yeah, that certainly is the focus. There's absolutely no doubt about that. But it's the focus. But what I like, and I heard Alex talking about this a little bit before me, but I think that the key to this whole thing within the market is we have had this total move from one to the next. And what do I mean by that? The rotation. It goes from technology, it goes to materials, it goes to, you know, all kinds of different parts of the market, whether it's energy or financials. But this rotation has been very, very healthy. It's not just one part of the market, one sector that's moving the market. People a lot of the time will point to technology, and certainly that's been great. But we've also had great moves out of the financials, great moves out of energy. Across the board, we are seeing this rotation. I love seeing what we're seeing right now. We do have a very, very tight range in terms of the volatility index right now, trading somewhere between, call it 15 and 16, and not too much higher. Every once in a while it does. It fades right back down, gets a little bit lower, and starts to move back up. So we're sort of stuck right there right now. I think that's something that's become more and more interesting. By the way, the volatility index itself, we've seen some monstrous buying of upside calls in the VIX going out to November and going out to December. So when I see that, it tells me that there's at least a little bit of nervousness out there that maybe we could get a spike. Now, the calls that they're buying, they bought 60,000. It's a call spread, a $9 call spread. They only paid $2.50 for it. It was November 16s against the November 25s, but they're going out to November. So do they think it's going to happen right now? If they did, they'd be a lot closer, but that's not what they're looking at. They're looking at some point between now and maybe November, maybe it's December, that we might see a little bit of a pickup in that volatility index.
Okay, but for now, I mean, September has very much defied the sort of seasonal weakness. I wonder what October will bring. Pete, always a pleasure. Thank you so much for joining us here, getting us across Carnival, and also your thoughts on the overall market today. Pete Najarian, co-owner Market Rebellion. Let's trade Carnival now with Tom White, host of Fast Market. Happy Monday, Tom. Nice to see you there. What's your example trade for this one?
Yeah, you've gotten maybe an opportunity here with the pullback. I mean, the stock traded 32.5 earlier today. It was up on the day, now down nearly 4%. So giving you some opportunity. So I looked at this as maybe give myself some duration for this thing to maybe correct and go back up to those levels, go out in duration a little bit. So I looked at a strategy that takes advantage of the lower implied volatility after the earnings came out. We usually see that vol crush, and we have seen that. So provide some opportunities. So I looked at basically a stock replacement type strategy, using the option market, not leveraging as much capital for a bullish trade. So went out to the December monthly cycle. So you got a few months until expiration on this one. We're going to buy an in-the-money call. It's got the higher delta. It's got a delta of above 65 or so, close to 70. So it's going to react more like the stock. And I looked at buying the December monthly, the 28 strike call. You're going to pay a debit of roughly about $3.60. It's probably trading closer to $3 right now. But the debit you pay is going to be your risk on it. Now, if you bought 100 shares of Carnival Cruise Lines here, it's going to cost you $2,900 in capital, right? You have to outlay for that 100 shares. Now, you can buy an in-the-money call, such as this December one, and your debit's going to be the risk. The debit you pay is going to be your risk on this trade. So I'm risking only about $360. Takes my break even up to 32.50 or 31.60. Excuse me, 31.60. That's only about 6.5% above the current share price. So that debit, you add it to the strike. That gets you your break even. You want it to go higher than that. But I think the key here is low volatility. It means the call costs less. And then also you've given yourself duration.
Okay, a good look at Carnival on the back foot, down 4% despite that beat on the top and bottom line there. Good to point out. Obviously, one that we're also seeing lower in trade today is Royal Caribbean. But if you look over the last 12 months, up over 80%. Talk to us about that one as far as an example trade, Tom.
Yeah, this one is definitely the high end of the cruise lines and has the best balance sheet. So I looked at a strategy that avoids earnings. It got earnings at the end of October. So I went out to the October 17th monthly options. And what we're going to do is we're going to buy an unbalanced put butterfly, but we're actually going to collect a credit on it. So in the October 17th, we're going to buy one of the 325 strike puts. It's basically at the money. Sell two of the 320 strike puts. And then to wrap it all up and make it risk defined, buy one of the 295 strike puts. You're going to collect a credit of roughly, I've got $4 credit on here. You're probably collecting closer to $5 credit. But the credit you collect, if it stays above 325, that's the credit you collect is what you can make on this. Now, you get that little kicker down there right at that short 320 strike. So even if it pulls back, that's where you get that max profitability. Break even where you do not want it to go. You do not want the stock to go below 311, which is the break even if you collect that $4 credit on this one. That's about 4% below the current share price. So you get that cushion to the downside, but you got a lot of risk if the stock does fall out of bed.
Okay, good to highlight Royal Caribbean there. All the cruise lines seem to be down, all but Viking today, actually, off the back of those earnings from Carnival. Strong growth and demand, but not feeling it today. Thank you for joining us today on the Morning Trade Live. I'm Sam.